Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Jennifer Johnson, Director of Municipal Bonds Research at Franklin Templeton, to discuss how macro fundamentals can impact the municipal bond market and what the catalyst will be for investors sitting on cash to invest in the space. Jennifer, it's great to have you with us. Welcome to Trade Talks.
Thank you for having me.
You got it. Let's start with your broader overview. What's your outlook going into 2024?
Sure, we'll look at it in a couple of different ways. First, in terms of the credit fundamentals, what's driving credit quality, we think things are actually quite stable to potentially strong, depending on the sector you're in. We're coming off the recovery after the pandemic, COVID aid, really strong tax revenues as a result of inflation. And as a result, a lot of state and local issuers have developed large reserve levels, rainy day funds. And so if there's any kind of slowdown in the economy, they'll be able to weather through it. From a market standpoint, we actually think it's a great time to get into the market now. We think that the Fed has probably stopped the process of raising rates, which made investors skittish. A lot of them went into cash, where they actually got paid for it. But we think now is the time to take on a little bit more risk, especially since fundamentals are strong, extend maturities a little bit, add duration, and really lock in some of these very high rates.
You had mentioned reserves before. However, the California LAO is estimating the state could have a $68 billion deficit. Are you concerned about this? And will we see similar deficits from other states?
Sure. So California is definitely the big kahuna when it comes to this. And in California, the income tax system is quite progressive. So when California does well, it tends to do better than everybody else with very high revenue increases. And then the flip side is also true. When things start to slow down, you tend to see higher deficits. And that's what we're seeing this year. The slowdown coming from income taxes and sales taxes has really impacted the state's budget. So they are projecting a very large deficit going into the next fiscal year, which kicked off last week with the governor's budget. So now we know what he wants, what he thinks the solutions should be to the budget, and he and the legislature will be getting to work to try to close that gap.
So what do you think will be the catalyst for people jumping into the muni market after sitting on cash on the sidelines? And what types of muni bonds would you be looking to buy right now?
Sure. So in terms of what will be the catalyst, we think it's the fact that, we're going to start to see the market take off. And we've actually seen a really good final 6 to 8 weeks of 2023. And you're actually starting to see some strong performance. And so we think that plus low default rates, high credit quality will really get people back into the muni market at this point. Yeah.
Are there sectors within the muni space that you like better than others right now?
Definitely. As I said, state and local governments are very well prepared, as are most sectors. Right now, we like state and local governments. We think that even with this weakness perhaps coming from tax revenues, we're still going to see strong budget tools to help solve for budget gaps and the ability to weather through anything. A couple sectors we're keeping our eyes on would be healthcare. Obviously extremely involved in the whole pandemic crisis. And one of the biggest challenges has been inflation for them. They don't get the benefit from tax revenues like state and local governments do, but instead they've seen the cost of everything go up, including labor. And they've had to resort to traveling nurses, contract aid, or contract employment is what we call that. Very expensive to try to maintain service levels to their communities. And so what we're starting to see over the last few months has been some stabilization there. We think there's probably still a ways to go. So we're watching that sector quite carefully.
Is there any impact of the commercial office real estate vacancies on the muni market?
Yes, so it's definitely another thing that we are watching closely. We've published papers on this, and it's something we spend a lot of time talking about. First, this is a very regional issue. There's going to be communities that are going to be more highly impacted by this, and some that actually won't. They've seen a lot of population growth, a lot of employment expansion. Those communities won't be as impacted. But if you look at some of the big cities like San Francisco, where I am, New York, you're definitely seeing a change in how we work. People are working from home. They're not coming into the office, and communities have to rethink this. Through our research, though, we've actually found some encouraging metrics that make us feel a little bit more comfortable. And number one is that state and local governments, school districts, a lot of entities do receive property tax revenue that come from these big office buildings. So as they're reassessed or office lease dynamics change, so can the tax revenues that the municipalities receive. However, we've found that so many of these communities like San Francisco, like New York, have such diverse revenue streams that even if there is an impact on the commercial side, it won't be as large an impact on the overall financial health of these communities. The second thing that we're encouraged by is that there's going to be a delay in terms of when these maybe low-priced sales impact the cities. It gives mayors, local boards of supervisors, any type of governing official time to try to come up with new ideas. How do they want to rethink their downtown areas? Are there permitting improvements they can make? What can they do to try to soften the blow and rebuild communities post-pandemic? So we're looking closely at what mayors are doing in many of these communities.
And Jennifer, what about the impact of credit trends on the muni space?
Right now, we see actually pretty good trends across the spectrum. We've seen strong revenue growth. It's slowing. Admittedly, that will change how people approach budgets over the next 1, 2, 3 years. Again, the credit fundamentals are so strong that we think they have the tools. We're looking for state and local governments and credits across the industry to not just look to one solution to solve any kind of slowdown in revenue or budget gap. We want it to be a diverse using of tools so that in the event that this slowdown does continue another year or maybe even another 2 years, they still have tools in their tool belt to address those deficits going forward. So management is going to be very crucial as they go through these budget seasons.
All right, Jennifer, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.